Hey everybody, it's Mike Rains with Remax Terrasol here in the Orange County real estate market of California. And this morning I would like to be able to share a presentation that I did with a networking group about the status of the market and why, with all the headwinds that real estate has right now with low inventory, high interest rates, why is home prices still rising? And so that's a crazy thing on that. So let me just share my screen in this presentation of what is going on there. And so a lot of people want to know, by the way, there's some of my stuff in the areas that I serve in buyers, sellers, and property management in the Orange County area, and some of the credentials that I have with the certified negotiation expert and the Graduate of Realtor Institute and the senior designation and so forth. But what I want to do is be able to kind of look at why these reasons are. And so today's snapshot of the market, the September 14th, and we're going to look at inventory, we're going to look at demand, and then we're going to see why are prices still rising when we have these things kind of as headwinds. So in the Orange County market right now, and this isn't particular to my area, so not all the markets are exactly the same, but the Orange County active listing inventory year over year, you'll see 5 years worth of data here. And you'll see in between those two dotted lines, you have what would be a typical peak of the year. So right around August, the number of inventory starts to decline. So it's peaked for the year. And that's primarily because people are back in school with the kids and so forth. They've already made their big move. People still move around for the rest of the year, but generally speaking, as far as the number of transactions, the spring going into summer markets peak out and then it starts falling. And this year is no different. But you'll notice at the bottom where that line is that our inventory levels are really super low. And right now we're down over the last couple of weeks, 49 homes. Down 2%. And so our inventory in Orange County sits at 2,385 homes. And what's startling about that is that that's across all property types. So when you're looking at mobile homes and condos and other types of properties, including senior housing, townhomes, all the way up through houses and luxury properties, that's all included in that number. So in all of Orange County, only 2,385 homes exist. And that's super low. The demand is a snapshot of the number of homes that have gone into pending sales over the prior month. And you'll see that too peaks around the same August, sometimes a little later in September, and then it starts to fall off for the year. And again, you can see where the arrow is that that's super low in the last this is the 5th year of this chart, showing that the number of new homes going into escrow are low. And in fact, it went from 1,576 down to 1,465 in the last couple of weeks. That's down 111 pending sales, or 7%. And that's the largest drop that we've seen this year. And it just so happens that it's coordinated with the interest rates ticking up to nearly 7.5% on the interest rates. And so buyers are like, oh, I can't buy that when it's 7.5% interest rates. And so that's affecting that demand. So the current inventory is down, the demand is down, and the interest rates are up. So this is the snapshot of our market. So with inventory down, demand being down, and interest rates up high, you would expect that the housing prices are going to go down with the high rates and the low demand and the low interest rate and the low inventory, that is. But let's look at what the data says, what's happening from 2022 at this time in August, which is where these numbers are, to 2023. And so what you'll notice here, what I've circled, is for the top portion of this is attached homes, and the bottom is for detached homes. And it goes from 22 to 23. And you'll notice, like, for example, on an attached home, like a condo or a townhome, it went from being 811,719 all the way up to 845,158. And detached homes were 1.6 million to 1.8 million roughly. So the highlights of this chart is that the closed transactions were down 9.8% for the detached homes, 5.7% for attached. So number of total transactions are lower. The new listings were also down 20.5% for detached homes and 22% for attached homes. And inventory overall down 38.1% for detached homes year over year. From 2022 to 2023, we have 38.1% less inventory. But As we saw in there, the average sales price for detached properties was up 12.5% and for 4.1% for attached homes. So why are the home prices still rising? The number one reason why it is that it's inventory. Inventory is going to remain, is and will remain lower, and it's lower than what's needed. And when you dive underneath the hood on that, you're going to understand why we have it. And it has to do with the mortgage rates. And so current homeowners who have mortgage rates have very low rates, and they don't want to make that move. So this is going to startle you, because the low rate stats are this: 25%. So people that have a mortgage across the United States, and these are national numbers, so 25% of the homes that have a mortgage in the US have a rate below 3%. That's crazy. And 65% of the homes that have mortgages have rates that are below 4%. So out of all the mortgages, some are below 3, some are below 4, but 65% of them are either in the 3s or 4s. And here's the real catcher of this inventory, is that 42% of all homes nationwide in the country have no mortgages at all. So a lot of people don't have mortgages, and those that do have mortgages, 65% of them are below 4%. So it's no wonder that people that don't have a mortgage, why would they sign up for a 7.5% interest rate when they don't have a mortgage at all? Or they have a low rate at 3, maybe 4%, something like that, and they just don't want to make that move. So what am I saying here? Inventory for now is tied to the interest rates. And that's just the way it is today. So inventory is going to be tied to the interest rates, and that translates to a lower number of sales. So one of the statistics that we've been given is the following. So back in 2020, if you remember, if you want to tie, how do I tie interest rates with the inventory and the number of transactions that are done? In 2020, interest rates were 3.72%, and the total number of homes sold that year was 5.6 million. In 2021, the rates dropped to 2.65, so it's no wonder that the number of transactions jumped up. It went to 6.1 million homes sold. In 2022, interest rates went up a little bit to 3, almost 3.25, and the number of transactions dropped to 5.1 million. That's 1 million less homes than 2021, because the interest rates jumped up almost a point. So in 2023 so far, we have an interest rate environment that it's fluctuating, but 7.25, 7.3. The national average right now is 7.32%. And so the number of transactions that have been done this year so far, and we're at the end of August into September, the number of homes there and the projected number of ones that are in escrow and likely to close by the end of the year, the total is 4.3 million. So it's not hard to see that when interest rates were super low at 2.65, you had sales at 6.1 million. And now that they're on the other end, they've gone up 3x from there to 7.32. The number of homes sold drops to 4.3 million. That's crazy. So where we can project it from here. And this is coming from Lawrence Yoon, he's a chief economist for the National Association of Realtors, as well as other banks that pitch in on information with this. So the 2024 projections are that the interest rates are going to start falling. Something's going to break. Unemployment's going to rise. So the Fed's going to have no choice but to start, lowering rates next year. We have 2 quarters. So fourth quarter into the first quarter, and then we're going to start seeing interest rates dropping, if not before then, down in the 5% range. So the number of transactions that's projected is going to go up to 4.8 million. And then in 2025, the interest rate's projected to be 4.5%. And that's going to make it go up a little bit down to 5.3. That's number of transactions going to be good. So as interest rate drops, we're going to see more sellers that are going to want, as the interest rates come down towards where they are. So if they're at 4% and maybe the rates drop into the 5% range, they might be saying, okay, you know what? I want to be near my kids. I'm willing to absorb the 1% difference between the 4 and the 5. And maybe in the future, as it drops, they'll be able to even refinance that further. And then the same thing's happening on the buy side. So you have the supply, which is from where the sellers are. As interest rates drop, they might be more willing to sell their property and make the move they want to make. And then you also have buyers that have like, I can't do 7.5% interest rate. Some of them can. If you know the history of interest rates, you'll know that interest rates have been higher than this before, and the number of transactions are there. But in this particular environment, where we don't have a lot of people that are able to absorb the difference of the payments because the values have gone up. And so it's hard to do a 3% higher mortgage than what was offered just 2 short years ago. So, but as interest rates drop, more buyers are going to come off the shelf and the sidelines and be more willing to buy. So the net effect is that the rates, as they drop, will remain the balance between supply and demand. You know, as supply increases and demand increases at the same time, they're going to kind of balance each other off. So the conclusion that we're drawing from this is that the home prices that we're seeing today are going to remain stable. In that there's not going to be a flood of housing. There's not going to be a crash for that reason. Until that changes, we're expecting that the values are going to stay the same and might even claim a little bit higher. I think Zillow had said just about a month ago that they're projecting another 4.6% rise from 23 to 24. And obviously that's going to be relative to the location. In Southern California, we don't have a lot of land to build on. And so there's not a number of inventory that can come on. But if you're in a market that has a lot of land and home builders can turn it on and suddenly build 5,000, 10,000 homes, that's going to bring a lot more inventory to that particular market. And so supply might outstrip demand. And so pricing is going to get soft in that environment. So if you have any questions, I would just encourage you to drop those into the comments and I can try to be able to address that anytime. I'm always available to try to answer questions and so forth. And even if you don't agree with me, drop the comments down or questions that you have and the reasons why, and let's talk about it. Because again, real estate is local. And so I want to be able to help you guys out. Reach out to me anytime. Love to be able to help you out in my market. Or if you need a great referral to somebody in another market, I have a lot of agents that I network with across the nation and be happy to make that introduction for you to work with a professional like myself. All right, have a great day.